Elon Musk just sold his entire stake in Twitter for $44 billion, but he didn't make a single dollar from it. In fact, he actually turned a profit by taking a massive $1.4 billion tax write-off. So how did Elon Musk make money without making money? And how did he avoid paying taxes on that $44 billion transaction? Well, that's what we're going to find out in today's video. Just a quick reminder before we start. The first reason is called tax harvesting. When you buy something, it usually loses value over time, whether it's a car, a house, or a stock. And that's because these assets depreciate, meaning they lose value over time. For example, if you buy a car for $50,000, it will probably be worth $45,000 at the end of the year because cars depreciate quickly. That means you've effectively lost $5,000 on your investment. Why does Elon Musk get to avoid paying taxes when we all have to pay ours? We've got plenty of videos on this channel explaining different ways you can legally avoid paying taxes. So make sure to check them out. Well, that's a great question, and the answer is that he doesn't. Elon Musk bought Twitter for $44 billion, but he didn't make any money from the deal. In fact, he lost $21 billion. But when he sold his Twitter stake earlier this month, he turned a $1.4 billion profit. So how is it possible for Elon Musk to lose $21 billion and still make $1.4 billion? It's simple. He profited from his losses. Elon Musk is a master of the art of tax planning, and he knows how to turn his losses into profits. These are legal tax avoidance strategies that everyone can use, not just Elon Musk. But the problem is that most people are unaware of them because they haven't read the law. Elon Musk has a team of lawyers and accountants that research every tax loophole in the book. Then he uses those tax loopholes to legally avoid paying taxes. So what you can do is write off that $5,000 as a tax deduction. And that's exactly what Elon Musk did. He took a $53.76 billion tax deduction because Twitter lost $53.76 billion in value since he bought it last year. Most people think that tax is a scam that only poor people pay. But the reality is that everyone with an income above $12,950 has to pay some form of tax. A C corporation is a separate legal entity from its owner, which means that it's responsible for paying its own taxes. And if Elon Musk had sold his Twitter stock through X Corp, then he would have had to pay capital gains tax on the transaction. But since he sold the stock in his personal name, he avoided paying any taxes on the deal whatsoever. However, billionaires like Elon Musk do whatever they can to legally avoid paying their fair share. If you sell all of your stocks within a 12-month period, then you'll have to pay long-term capital gains tax on the transaction. He simply took advantage of 3 little-known tax loopholes, and voila, no more tax bill. But if you spread out the sale over several months, then you can qualify for a long-term capital gains tax rate of 0%, which is exactly what Elon Musk did. And in this video, we show you exactly how Elon used a little-known tax loophole to outsmart the IRS. In fact, he lost $21 billion because he had to borrow $21 billion to complete the transaction. But here's the thing. Even though Elon didn't make any money from buying Twitter, he was still able to take a $1.4 billion tax write-off when he sold his Twitter stake back to X Corp earlier this month. So how did he do it? And save himself $1.4 billion in taxes when he sold his Twitter stake. But before we go any further, please make sure to hit that subscribe button so you do want to miss out on any future tax tips or strategies. Now let's get into it. On April 4th, 2022, Elon Musk offered to buy 100% of Twitter's stock for $54.20 per share. This was a 38% premium on Twitter's closing stock price on April 1st. So if you were a Twitter shareholder, you would have made a lot of money because you could sell your shares to Elon for $54.20 each, which was 38% more than what you could get on the open market. However, this is not the case for Elon. The $54.20 per share that he offered to buy, Twitter was actually the maximum amount he was willing to pay. He wasn't going to pay 1 penny more than that, even if the Twitter share price went up on the open market. In order to understand how Elon Musk avoided paying taxes on his Twitter stock sale, we first have to understand how much money he actually made from the deal. So when Elon bought Twitter for $44 billion, he didn't make any money from the deal. Well, there are three main reasons why Elon Musk was able to take such a large tax deduction when he sold his Twitter stake. The second reason why Elon Musk was able to take such a big tax deduction is because he owns a company called X Corp. An X Corp is a C corporation. And finally, the third reason why Elon Musk was able to avoid paying taxes on his Twitter stock sale is because he made sure to spread out the transaction over several months. So there you have it. That's how Elon Musk avoided paying taxes on his $44 billion Twitter stock sale. Now, I know what you're thinking. These tax loopholes don't seem fair. If you want to do the same thing, you just have to learn about tax loopholes yourself. Now, before we go, I want you to take a moment to think about this.